Hello again. This is Josh Carr with The Real Angle, and today I'm speaking with Ashleigh Simpson at Grosvenor. Ashleigh, how are you doing today?
I'm doing well. It's good to see you, my friend.
Good to see you too. Glad we could get on the line today. So let's start with the basics. You're first off, how do you pronounce the company? Is it Grosvenor? Is it Grosvenor? I hear it called a lot of different things over the years.
It's Grosvenor. The S is silent. It's obviously a British firm, but not obviously with a French name, but the S is silent.
I love it. British firm with French name. All good stuff. So let's start with the basics here. What do you what's your title? What do you do at Grosvenor?
Well, the title just means that when things go wrong, they know who to blame. So I'll start with that. That's usually
Sure,
the first part. So
sure.
I'm Ashley Simpson, and I had Grosvenor's structured development finance program, providing capital to third-party developers in Canada and the US.
Hmm.
And I've been back here now 17 months, I believe it's been so far.
Okay. And where are you physically based? You personally.
Physically, I'm in Washington, D.C. I'm literally across from the White House.
Got it.
Just over my left shoulder is where the White House is.
That sounds much more exciting than it probably is. But
It does. It does.
fair enough. Fair enough. Now, you mentioned Canadian operations. I mean, you guys are, would you say right now well, so let's talk a little bit about stuff. So, you're there 17 months. Where were you before? Kind of how'd you end up where you are now?
Sure. So prior to returning to Grosvenor, I was at MetLife Investment Management
Okay.
for about 16 years. Moved around a bit from Washington to New York to San Francisco and back to New York, New Jersey. And I had a suite of experiences there from, doing capital raising to bringing in new clients to going back and doing more acquisitions, joint ventures, things that I enjoy. But after a while, I figured there's someone better to do more transactions than I've done and pass the baton on to someone else.
Sure. Sure. And you came to where you are now. Now, let's talk a little bit about what the investment platform is. So, you mentioned you're partnering with operators, with developers, correct? I mean, you're not.
Yes,
Okay.
yes.
So are you, if you were to describe what you guys do, would you say that you're a co-GP or an LP? How would you describe what that relationship looks like?
Sure, it's a great question. And maybe I'll take a half step back just to set the
Sure.
table. So Grosvenor Property America basically operates in Canada and the US. And we have three lines of businesses. Um, our first line of business is our development business that's focused on build to core, and that's all balance sheet. And in some cases, if not most cases, we are acting as a GP with some LP capital. And
Okay.
our investment business that's focused on core and value add investments. And that's also the majority of our balance sheet, and in some cases with third party investors. And the third business is the business that I run, structured development finance, which is focused on more merchant build for residential ground up development in Canada and the US. So that's where the distinction between what I do and what the other lines of businesses do. But as a whole, we make up a Grosvenor Property America.
Okay. Okay. So a lot of different products, if you will.
Yes.
So and markets, I know you mentioned US, Canada. I mean, right now, are there any markets? I mean, when you think about the markets you're in, is there a size of market you're looking at? Are you trying to be in the bigger cities? What's the kind of where's the focus, if you will? Or is it just simply you're going where the deal finds you, so to speak?
Sure. So from two areas, I'll answer that question: geographic and then market dynamics.
Hmm.
So from a geographic perspective, we are coastal for our business, and we run from Vancouver to Toronto, down the East Coast, Boston, DC Metro, and then off to Denver, Northern and Southern California, Seattle. Those are the markets that we focus on from a perspective, from a geographic perspective.
Okay.
And then from a fundamental perspective, there are things that we look at that give us diversity in terms of economies. So
Hmm.
different geographic areas have different economies. And then the other part is we're anchored in, because we're focused on residential, we're anchored in what are the fundamental drivers for sale homes and also rentals. And the obvious headline is it costs more to own a home, or twice as much to own a home on a monthly basis as it does on average to rent. So there is more demand, and one would argue with that perspective, there's more demand for rental. So we focus in areas where there is demand for both, but we understand that there may be more demand for rental than there is for sale product.
Right, and
And
that
then
changes with the cycle. I mean,
and that changes with the cycle.
yeah.
And one of the things that we try to do, or we're also just to dial a little further into it, is we look at the long run historical average for population and income growth in those markets. And with our research team, we've been able to identify submarkets within those geographic areas where we feel that the next 5 years will perform in those two areas will outperform the long run average. So in tying it all together, not only from a geographic perspective, but we're also tying it with some of the fundamentals that we see that could be accelerants to our success on a go-forward basis.
Right, trying to be data driven, finding specific
Yes,
markets that ring your bells.
I'm a bit of a data nerd sometimes.
No, and that's a beautiful thing. I mean, because I deal a lot with local operators who basically say, well, I know this market really well, so I can make money here regardless of where we are because I know the market. And while I respect that, it's still always given the option better to be in a good market than a bad market. I mean,
Yes,
given the option. Now, the Canadian angle is interesting to me because, I deal with a lot of American firms who frankly just don't even think of Canada. Like they don't like Canada doesn't exist for a lot of American developers mindset wise. Whereas I think going the other direction, Canada can't really ignore us just because the U.S. is huge. I mean, it's kind of
yes.
hard to ignore the U.S. So the Canadian focus is that because the mothership, the parent company, if you will, is coming from the U.K. Like, did the entity start in Canada? Like, why is the Canadian, do you think the Canadian focus is linked to, in some capacity, the fact that the parent entity is a UK entity, I guess, is what I'm trying to say.
There is a direct link there. Yes,
Okay.
and we started in Vancouver some over 75 years ago. I believe if I remember my Grosvenor history correctly,
Sure.
I don't think there's a test at the end.
That's
But
fine. Yeah.
there is definitely a link to the mothership in London, and we migrated. I believe we migrated south into the U.S. starting in California. We had at one point, and in the 80s, we had at one point investments in uh, Hawaii. I wasn't in real estate at the time, or even
Sure,
thought
sure.
about it at the time, but I would have loved to work in Hawaii. And we migrated east, and the building I sit in today was, I believe, one of our first investments in Washington, D.C., and that's been some maybe 40 years ago,
Sure, sure.
if you will.
Yeah, no, I've never had to do a site visit on Hawaii, but if I were asked, I would say yes.
I raised my
Yeah.
hand with you.
Unfortunately, my site visits have always been to, not to beat up on any cities, to far less glamorous locations like Cleveland or
I
Baltimore.
agree.
No one's ever, not to knock on Cleveland, but it's not Hawaii. So, nonetheless, so timeline wise, when you're partnering with developers, when you're working with developers, I mean, is the goal build it and just get out and then it gets sold? Are you looking to do stuff where you guys stay in long term and then you're just holding it for portfolio? What's the mindset, if you will?
Yeah, the mindset is the former. We are our capital is high octane capital, so we are
Okay,
in and out, and that recap event can either be refinancing or a sale of the asset, and we redeploy that capital or reinvest that capital depending on the appetite of our investors. So the focus has always been for this particular business to invest and then exit. For other lines of businesses, those are assets that we hold for the long term and provide us cash flow for the long term.
Sure. Now, I do want to ask because we've talked a little bit about your partners, if you will, or operating partners. So you decide you want to be in a market. You know, you love Nashville. You like a neighborhood in Nashville. It doesn't matter what the city is, right? You pick a city, you pick the neighborhood.
Yeah,
How do you find them? How do they find you? Because it's great to decide that this is the up and coming neighborhood in Nashville, Boston, what have you. What's that look like?
great question in terms of identifying sponsors we want to work with.
Yeah, how do you find
Yeah,
sponsors? How do sponsors find you? It's a big world, right?
it is a big world. Look, I think one of the things that, so it's multi-pronged. We certainly use the traditional broker relationships,
Hmm.
and then we also at times follow relationships that we've had with other sponsors. And that's been a great, I would say, a great conveyor belt, if you will, of bringing deals to us and success.
Sure.
And then we also, do the old school getting into a market, meeting people, whether it's through ULI or other avenues. We get into the market and really try to understand who the players are, and we do cold call people. And so there's a layering of accessing the market via those channels that helps us, if you will, promote the brand and carry the flag. And in many cases, people are like, I didn't know Grosvenor did that. I didn't know Grosvenor had that kind of capital. And that's fair. We're not like the company I used to work at MetLife or other larger institutional groups. But we have the same capacity in terms of our underwriting, underwriting prowess. We look at deals similarly, and we also have access to some of the same developers that the large institutional firms have access to.
No, and name brand, it's funny with name brand. You mentioned MetLife, your prior employer, they have a huge retail operation, obviously. So, there are a lot of people who are not in the industry who just know MetLife because
Yes,
big company. I mean,
exactly.
yeah, I mean, so, I mean, many years ago, not to get into my life because we're talking about you, but many years ago, I worked doing work for Chase Manhattan Bank before they merged with JP Morgan. And, every consumer in New York City knew Chase Manhattan Bank because they were on every corner.
Of
And
course.
and then when they merged with JP Morgan, there was a whole conversation about, well, that's great, but what name do we put on the door? Because the average American, JP Morgan's institutional. They don't do retail banking. That's
Yeah.
not their business. So, no, it's interesting. Yeah, no, you guys are. I mean, from my perspective, as someone in the industry, you guys are huge, but no one knows who you are,
And
because
we like it
again,
like that at times.
yeah, no, and that's no knock on you. I mean, look, you're the parent entity is UK based, so
Yes.
you know there's that aspect, and you don't have a retail presence because you're not doing retail banking, you're not writing life insurance policies, but that doesn't mean you're not a big institutional player. And your point about reaching and finding developers, yeah, that's a challenge, I imagine, because I mean, just because someone built a good project doesn't mean they're someone you want to partner with. Sometimes guys just get lucky and they do one project and make a bunch of money. Doesn't mean
Right.
they're actually good operating partners.
Agreed. Agreed. And
Which
look, we target established middle market developers all the way up to institutional quality developers with expertise across markets and also countries. We have you know, repeat business from about 60% of the sponsors we've worked with, which is a fairly high
that's great.
number, high ratio. And we like that because they've delivered for us through cycles, through up and down cycles. And I think a that's something we hang our hat on is having the ability to choose the right sponsor to finance their individual investments.
I imagine it also just from an ease of repeat business. I mean, once you've negotiated the legal documents, once you know who the players are, once you know
Yes,
how their reporting system works, all that jazz, and once they've learned how you want to see data. I mean, because I mean, I've raised equity, and I mean, different investors want to see information different ways, and that's a process too. Just learning like how do you want to see that info.
I
Um,
think that's underestimated when you know middle market developers are talking to institutional groups.
Hmm.
That piece is, I think, is underestimated by some developers in that there is a level of expectation or quality of work that's required
Right.
because everyone, as I tell everyone, everyone has a boss. No matter who you are, they may
Right.
not be at the table
No, we
when
all
we're
answer to somebody. That's
but
life. Sure.
yeah, there's
Yeah.
somebody in the back that can veto whatever you may do.
Right.
And you want to, if you're the person at the table, you want to have the person that's not at the table well informed around what um, what you're doing. And part of that is if I'm doing diligence on you as an investor, a developer, I need to understand what's happening with the quality of work from not only from the development of the project, but also from financial reporting side, so that people behind me can go, okay, yeah, we see that they can deliver not only in the the actual development, but also on the quality of the softer stuff, the reporting and accuracy of the reporting.
Sure. It's not enough to just simply be we made money. It's to giving transparency and feedback so that you can give feedback to your people and so that the whole system runs.
Agreed.
Yeah.
Agreed.
No, and that's a challenge. It's not enough to just do good work. You have to show people that you did good work.
Yeah.
Yeah, no,
Very
it's
true.
it's funny. And now I put my academic hat on because I've been an adjunct professor for years. But one of the things you always say as an instructor to people when they're answering a test is show your work, right? I mean,
Right.
great, you got the answer of five. Well, how did you
How'd you
get
get
to
it?
five? Like because if you just put down five, I start to think maybe you read it off the guy's paper next to you.
You're,
Maybe you just guessed. I mean, I
yeah.
don't know how you got five. Show your
Yeah.
work. Yeah, no, it's these truisms come back again and again. It's I mean, the thing about football, it's blocking and tackling. It often is just the basics. It comes back to just doing it well.
It's
It's
just the basics. It
yeah.
really is. And I think, look, the environment that we're in today
Hmm.
is really getting back to the basics.
Yeah.
There was a long period where the capital markets saved a lot of, you know, bad decisions that people may have made.
Hmm.
And those decisions are highlighted today, given the current market we're in. And
Well, yeah. I mean,
fundamentals, this is the fundamental piece that you're talking about.
yeah, I mean, it's funny because you talk about housing because I know that's kind of what you're focused on, but even things just like housing size, like, okay, for years, units have been getting bigger and bigger while household sizes have been getting smaller and smaller, and if the goal of housing is to provide shelter, you start to ask basic questions like, okay, what do people actually need in terms of housing? Like I get it, everyone wants a bigger house, but when push comes to shove and they have to start cutting corners, like what are you willing to pay for and what was just a nice thing that if the developer gave it to you for free you'd take.
Yeah,
And when everything was going up, no one had to ask those questions. I mean, you mentioned ULI, earlier, Midland Institute, I remember had great data on the way that housing was getting bigger and household sizes were getting smaller. I mean, certain point, it just gets silly. So,
yeah,
structurally, I mean, and I wanted to hit back on something you mentioned earlier. So, you guys are multinational. Um, you, obviously, your U.S. operation has been up for decades now. Um, are you guys are effectively independent, right? I mean, you're just sort of running as your own thing, or are you really what's that? I always find it interesting talking to people multinationals because you get into
yeah,
conversations about structure. Like, to what extent are you kind of doing your own thing? I guess
sure.
is a way of putting it.
Well, look, we are our own operating company with
Okay.
our own executive team and board. We do, however, adhere to what's called the compact, and the compact is defined by Grosvenor Group out of London, and it governs many things about how we operate as a company. We still have, I would say, jurisdiction of how we invest, where we invest,
You have your own investment
capital,
committee.
and making local decisions
Right.
around those investments. So that still remains within the purview of the executive team and the senior leadership.
Got it.
So the best way I think is to describe it is that we have a long enough um, runway to
Hmm.
do as much as we need to make our business successful over time and sustain it as well.
Well put. While still part of a broader corporate culture,
But yes, part of our broader
but you're not
platform.
necessarily having tea at 3 o'clock. Um,
Well, there are some things that we
Maybe
I
you
wouldn't
are.
say I wouldn't say we have tea, but we do recognize our Canadian brethren, our Canadian colleagues. Uh, December 26th coming up here as Boxing Day, and
Sure.
they will be off. And you know, I kind of know what Boxing Day is because I'm also an immigrant from a former British colony, but everyone has a different definition of what Boxing Day is, but it's still a holiday,
But it's a
and
holiday. Whereas
it's a
as an
holiday.
American, as a U.S. born citizen, who's not an immigrant, this was not in my language until I started
That was
working.
the yes.
Yeah, and then I'm like, what is boxing? Did you hit each other? It's not a word we use.
Yeah,
Uh,
the definition runs pretty wide, if
right,
you will. It's
right.
supposed to be, where one definition is where uh, you may re-gift things that you received to folks that didn't have didn't receive anything for Christmas.
Sure.
To
To the less fortunate, give things to the less
you fill in
fortunate.
the blank on whatever definition you want. I really don't know if there is I do not know if there is a true definition
Sure,
of what
sure.
Boxing Day is, and it may just be all urban legend at this
Yeah,
point.
I mean, as an American, it always just felt to me like, hey, it's the day after Christmas. Mom and Dad have been up all night wrapping presents. They're tired. They don't want to go to work. That's
They don't
my.
want to go to work.
Because I don't know
Yeah.
about you, but I've always taken December 26th off either way because I was up with my wife wrapping presents at 1 in the morning,
Right.
and I'm
Right.
tired. That's just having kids. So let's talk about the one question I always like to ask is the secret sauce. By that I mean you work on a lot of different deals. What deal works for your entity that doesn't work for another entity? Like, what's a deal that you guys are like, this rings our bell, whereas one of your competitors would just take a pass?
That's a great question. The I don't know that there is a maybe I'll frame it another way in terms of what really works for us. What really works for us is predicated on some of the things that I mentioned early on in terms of the fundamentals in the market.
Okay.
The other piece that I think works well for us is we really focus on creating space and place with the developments that we capitalize. And so we look for that, and that could be in an urban setting, for in some cases, and also a suburban setting.
Okay.
The other part of it is we're really focused on how the development impacts the environment, and that's been something we've probably amplified more today than maybe in the past. So that's I wouldn't say a lot of people are not doing it, but it's certainly coming into vogue that is happening, that focus is happening today. And I think the last thing I'll mention is, yeah, early on I mentioned about doing repeat business with a subset of developers.
Right.
We also think that adds credibility to how we execute this business across the US and Canada, is that
Okay.
we've partnered or we've picked sponsors that have a strong reputation and have delivered for us. So that's how we execute in each of our markets. And even in new markets where we may not have boots on the ground. For example, we don't have boots on the ground in Vancouver, excuse me, in Seattle, but we've
Hmm.
executed business in Seattle. We don't have boots on the ground in Boston, but we're certainly in Boston and would execute there with potentially one of our existing partners or someone that we may have done business elsewhere in our platform.
Right.
So I would
And
say those are
Boston's
the
not.
handful of things that work well for us.
No, and yeah, Seattle's not that far from Vancouver, and Boston's not that far from New York and D.C. All things being equal. No,
Yeah.
it's funny. I went to college in the Northwest, and Portland, Seattle, Vancouver are really more like one collective entity, in the same way that's kind of like D.C., New York, Boston are like, you know, it's an integrated zone, if you will.
Yes.
And if
Yes.
if you can do one city, you can kind of float into the other and that sort of thing. That's interesting. So, so as far as new markets, one question I always like to ask is, for good or bad, nothing ever works out as expected, because that's life.
That's life.
Um,
Yeah.
any recent surprises that you feel like sharing, good or bad? I always like to ask that. Deals that worked out,
Yeah,
markets that, you know,
that's a great question. I think, in my 17 months here, as the Fed kept raising rates, there was, my reaction was, we're not doing any development on for sale projects at
sure,
all. We're just
sure,
not
rates
doing
are
it.
crazy. Yep,
Crazy to do that.
yep.
And before by the beginning of the year, we started to see the manifestation of, homeowners that had a sub 3 interest rate sort of pulling back.
Mhm, mhm.
But then there was demand for housing in the for sale market. And that had manifested itself in the public home builders buying up, needing lots, needing, lots that were fully developed so that it can go vertical. And you started to see new housing starts kick up and demand for new housing kick up. And I was scratching my head going, wait a minute, rates have moved, mortgage rates have also moved, but there's also demand for housing, and the two didn't seem to make sense
I
at
didn't
all.
understand it either. I don't know where all these people are getting money from. Like,
Right?
normally you think if rates go from 3 to 7, that,
Yeah.
the guy who had $1 million house would say, well,
Yes.
now I can only afford a $500,000 house because math,
Right.
and therefore demand should drop. And I figured
Right.
that the only houses that would come to market would be forced sales, divorce, death, that sort of thing.
Right.
But yet, we're building new units, we're building new housing. Maybe it's constrained because the supply chains are still kind of a mess. But
Right.
yeah, no, it's the darndest thing. I don't know where all these people are getting money from. I don't understand it because
All right. So
you know,
I
eh,
was wrong about that, and
yeah,
we started looking at developments in the U.S. and Canada around for sale. So we've pivoted. So that I would say that was a learning lesson for me. Yeah. And again, it didn't follow logic that you would have high interest rates and then also demand for it because we lived through, was it 12 years of a low interest rate environment,
right,
much longer than one would expect. And
yeah.
with rates moving so quickly, it almost seemed natural. It seemed natural that people would stop buying, period, and focus more on renting.
Yeah, no, it almost. I mean, I hate to. I mean, not to beat up on economic forecasters, but a certain point, I think in your career, you just realize that prediction is almost pointless. Like, just
That's true.
if you find a deal and the numbers work, you should just do it because the reality is no one really knows, and so
Yeah,
shrug. Like what do you do? No, so as long as we talked about interest rates, so let's talk about sort of the plans for pulling back for a moment, next 12 months, 24 months, 5 years, kind of what's the strategic vision here? What direction do you think you guys are going to be going big picture as rates seem
big
to be
picture, great
normalizing?
question. So big picture, I think the focus will remain on housing, and the focus will remain on adding to the housing stock
Hmm.
in a way that we think benefits that particular market. And the big piece that the attribution between for sale and rental will sort of depend on the cycle we're in. But I
Hmm.
think there's still a bias toward rental today, just given when you look at what's happened with interest rates, there's been a throttling back of, new housing development on the multifamily side.
Right.
So you have demand increasing because of affordability. The affordability index is much wider, if you will. And then you also have, um, I'm sorry, you have, affordability being, buying a home is pretty high. And then you also have the retard or the throttling back of housing starts. So there is this gap there that needs to be filled. There is, I think, a moment in time where there's an opportunity to start building again on the multifamily side. And I think that should help alleviate some of the pressure that we're seeing where, housing, where rents are moving and people are still sort of trying to figure out how they're gonna make that monthly rent.
Right.
Um, I would say that's probably a 5-year cycle
Sure.
on the most conservative end. It's a 5-year cycle. I mean, I guess maybe more aggressive end. It's sort of we can fill it in 5 years, but it certainly, I think, could last through a 5-year period to get.
Yeah, and I think it also gets interesting when you think about sort of long-term trends in the United States of, people putting off household formation for longer periods of time. People getting married or settling down later and later in life.
Yeah,
So I think that's also, I mean, for whatever my opinion is worth, when you talk about long-term demand for rental product, there's a real lack of rental product in the United States. I mean, rental product in the U.S. traditionally has been it's been a low income product. It, it's not
yes,
been it's not been people who have money who could buy a house. And it seems like the American culture is changing to say, hey, I could buy a house, but for family reasons, for personal reasons, I don't want to, you know?
right.
So
And
it's,
and that's manifesting itself in terms of how apartments are designed.
yeah.
So you're starting to see, so if you think of the cohort, the age cohort that is renting today and potentially rent, going forward, that
Right.
cohort has expanded to maybe people in their 40s.
Mm-hmm. Mm-hmm.
All
Mm-hmm.
right. And as those individuals, anywhere between 30 and 40, as they start to be part of new or existing household formation, and those demands for use of their home changes, you're starting to see slightly bigger homes than you may have seen in the past. So, for example, if you're looking at a 700 square foot apartment, you may be at 800 square feet or 900 square feet on
Sure.
average, because people want to have more efficient kitchens,
Right.
a place where they can work outside of their casual space where they may dine or entertain.
Uh-huh.
Uh,
Uh-huh.
better design, bedrooms and vanities, things of that nature. That cohort is driving. So I think that if housing continues to be out of reach for many, it will continue to influence how we design apartments for that particular cohort.
Right.
And that particular cohort, at least right now, is starting to demand more and more space for them to live in and also work in, given we're also a remote environment,
Yeah,
there's a remote environment
the
that I
work
think
from
is here
home
to
thing is
stay.
yeah, the work from home thing is interesting because it's not just space, it's quality of space, right? It's
Yes,
soundproofing, it's solid doors, it's high-speed internet, it's having a place that's more than just a room that we throw the treadmill in. Like
right.
it's a proper office, and
Yes,
I don't know about your situation personally, but I know when I had to work from home for a period of time, we had a room in my house that technically was the home office, but it wasn't really ever set up as a home office. It was
right.
just simply we had a computer in there on a desk, but prior to the work from home thing, it was like, well, I'll pay some bills or I'll do some household family stuff. It
Not
was not.
intense work.
Right. I mean, and then all of a sudden you're saying, wait a moment, I need to get a second monitor. I need a bigger desk. I need a proper office chair. It needs to be an office for real.
Right.
Which is all doable, but yeah, no, it's very interesting. And, when I talk to people in the office space industry, they're having challenges because exactly what's driving your business is destroying theirs. I mean, I hate to say it. I don't mean to beat up on the office building people, but wow, I don't know what you
Yeah,
do with a lot of that
that
vacant space.
that's gonna take some time to unwind.
Oh yeah.
And no one has a silver bullet on how to deal with office inventory
Hmm.
or excess office inventory. And I know that there are some solutions out there people are trying.
Sure.
Conversions is one example.
Yeah,
Tear downs
yeah,
is another example.
shocking amount of space though. It's a shocking amount of
Yes,
space. I mean, it's just, and I can think of cities that depopulated like Cleveland, Detroit, what have you, that have office buildings that are now 40, 50 years old, and they never found a use for them because when the population dropped, yeah, that was it. So, yeah, I
right.
mean, conversions in a market like New York City that I can understand because we still have a heck of a lot of people here. Um,
Hmm.
but markets, some other cities there is no good alternative use.
Right.
Housing is relatively inexpensive in cities like Cleveland and Detroit and Baltimore. You don't need to convert those buildings. You could just buy a house for less money. So yeah, I don't know. I don't know what you do in some of those cities. I just don't.
Yeah.
And no one really does. But nonetheless, well, this has been good. It's been good to talk about the growth in for rental product and what you guys are doing. And I think your platform is genuinely interesting. It's I don't know. It's an interesting platform, and it's one you guys have been dedicated to, which I also think is really interesting because it seems to me in our industry a lot of companies sort of come in and out of a plan of a strategy as opposed to
Yes.
what you guys have done, which is really built a legitimate business around the strategy and kept at it for decades, which is pretty amazing.
It's a core value of Grosvenor. It is a core value, very sticky organization in terms of where we invest, how we treat people, how we treat our stakeholders, both internal and external.
Sure.
It is a core value of ours.
Not just chasing a fad or the latest product hype
No,
and being
no,
like, hey,
that's
here's
one
what we
thing
do
we
for you.
don't do is chase fads.
That's refreshing. I don't know.
I
It's
like
It's
that.
it's nice to hear.
It's nice to hear
It's the basics sometimes.
the
It
basics.
really
Yeah,
does come back to the basics. Well,
the
beautiful.
basics,
Well,
absolutely.
Ashleigh, thanks again for joining me. Glad we could talk
Yep,
about this. And
absolutely, Josh. My pleasure. If there's anything else I can do for you with you, please let me know. It's always an absolute pleasure to catch up with you. I know I nerd out a little bit sometimes, but that's a good thing.
well, thanks again. Thanks again.
All right. Thanks, Josh.
Thanks.